I came to Canada at age 18, so 12 years ago. Um, I could barely speak English. I thought I can until I don't understand math 12 question. Then, but I know I'm good at math, so I chose engineering for university because really that's the safest route to have a specialty that can make money right off the bat. Because my tuition fee is 30K per year as an international student, so there's a lot of burden on my shoulder. As in, if my dad or parents like struggle to pay for that, I don't want myself to be a burden. So that was my number one thing. I'm good at math. Like I was, my dad's a doctor, so it's good that he didn't push me into medicine. But I know that it's very expensive. I know if I'm gonna go for medicine, it's gonna take a lot longer. So I want that to be shorter.
Yeah.
So I thought I was gonna go into engineer, and that's where I learned. I started having interest in the finance side because a lot of time I actually, take a minor in accounting, finance, stock course at night. And a lot of them I didn't even register. I just found out when the timetable was from a friend, and I would just sit in. And then professor for the whole for the whole term thought I was part of that course.
Yeah.
Now, what I found is that the way they teach it in school about stocks, options, like accounting, whatever, they just focus on the numbering side, but they don't tell you what's a real world impact on your life or on a company's standpoint, right? I just learned it. I got good grades, but it wasn't sexy for me at all, right? So I just started playing in stocks since second year 2011 and boring stocks like TD, Ambridge, Loblaws, right? Just buy and hold it for a little bit. Oh, it went up by 5% a year, sell it. And it's until like 2016, I ran into one of my coach in Taiwan. She's 2 years younger than me. At that time, she was trading um, stock future index. So for people who doesn't know,
Yeah.
it's like S&P, and there's a future market for S&P. That's what she's trading in Taiwan and the Hong Kong market and sometimes in the German market. So I was like so amazed by, I at first I thought it was a scam because the amount of report and money that's generating for that it's killing me because it's big account, very big account, and then her system is just so intriguing. So I hired her to help me with day trading when I had a full-time job at Honda working as a project manager. So I was at that time I didn't know better, right? I was just starting on real estate. I worked like 400 to 800 hours of overtime at Honda every year. Just thought that's the fastest way to save up my down payment, right? And then, now that we look back, yes, might not be the best decision, but that was the only thing I know at that time. So I did that. At night, I trade, I spend a 5 to 6 hours from Monday to Friday night doing day trading. And that's where I trade for 1 to 2 hour. Prepare for 1 to 2 hour before actual trading, trade for 1 to 2 hour. And then I spend 2 to 3 hours writing reports regarding the charts, regarding my strategy, was a part of my strategy, was a part of my greed and fear. And I reflect with my coach. That was so painful. And at that time, I was playing with different option strategies, try to stabilize and find out what actually works, what actually not, right? And then eventually, it was a bittersweet experience, like I said, for day trading. But the overall return is good, but the return on time is actually really low. And return on stress, that stress is really high. And I had a lot of white hair around my head at age 26, right? So I stopped when I fell asleep in front of my four monitors, all those day trading setup. And then I just started diving into more options, and I make a better return on time and better return on stress. And then until I quit my job early 2020 before the COVID, because I replaced my income with this strategy,
Yeah.
6-figure income. So from there, I'm like, okay, what am I gonna do? It's almost like all of a sudden, like you're truly your own boss. You can sit here all day, or you can figure out something. So I started the YouTube, took a lot of course, and then, that's when the real estate, I was kind of like taking a hit and all that. It turns out really well, but that's where my nest egg is. And I know the worst thing is I can turn back to my real estate, sell one of the property, even though I don't have to. But that was like, I replaced my 6-figure income. I have real estate portfolio,
Yeah.
and now the world's my oyster. I just gonna go at it, right?
That's awesome. And what so a few things there. Uh, I'm trying to think what I want to ask first. So let's stay on the topic of stock options trading. And I think it was almost 6 months ago. to the day that I had someone else on, and I was learning about it, and it was kind of
Hmm.
intriguing because I've heard about it a few times, right?
Hmm.
Um, I signed up, and then like I just never did anything with it, right?
Hmm.
And it was because I didn't appreciate, and I should have known better, but how much time was going to be required to learn it so that I didn't make foolish mistakes.
Hmm.
And I think that that is sometimes even with people coming into commercial real estate, right? Like
Yes.
I don't hide the fact that there's some work, right?
Lots
The
of work.
Yeah, like the bulk of it is the
Mm.
front end, right? It's understanding what I call the game of commercial real estate,
Yes.
getting clear on what it is, your strategy. I mean, there's not that many, right?
Yeah.
Are you trying to make money, or are you trying to grow and keep your money? And then depending
Yes.
on what your strategy is from there, then we can go after value add, core, whatever. But um, but I didn't have that context coming into options trading, if you will. And
Mm-hmm.
so for someone that, like, let's just take me for example. Like, how would you frame it? So it's like, okay, Shane, you should expect to put in this amount of energy, and based on that, you'll probably start to end up trading successfully. And like, what does that journey look like, I guess?
Yeah, I can definitely relate using the analogy of multifamily investing because
Yeah.
you know me, I'm starting to learn that. I took multiple courses. It's actually like it's actually very different from residential side, not just from the property standpoint, but the way they run numbers. And it's that network of
Yes.
your power team. It's so hard to find that. A lot harder than residential. Residential, there's plenty of people. And if you make a small mistake, it's okay.
Yeah.
But in commercial, it can be night and day of your power team, either from realtor standpoint, whether from mortgage broker standpoint, whether from your lawyer standpoint, all of them
It's huge.
adds up really quick.
Yeah.
And you can probably echo to that. Now, I'll say this. I think stock option will take you less time and less stress to learn than multifamily.
Right.
The return is a different thing, right? Depending on your strategy, but stock option, the strategy I teach will take less time. Now, why do I say that? It's because I put together that system
Hmm.
and there's more control from your side, as in you don't have so many variable and humans in
Hmm.
this game. Biggest part is actually yourself. And the 50% of that is your psychology.
Yes.
Whether you believe in it, whether that's the company you invest in, or you believe in yourself in this system, that's
Yes.
50% of the game. And the greed and fear is part of that 50%. Most people buy stocks when it goes up because they don't want to miss out.
Yeah.
Most people sell at a loss when the stock pull back because the fear, they feel like I don't want to be the last loser in the game.
Yeah.
But as a matter of fact, Warren Buffett said it, right? You should do it the other way around. Buy a good company at low price when it actually going down and then sell it when it goes up. Buy low, sell high, but easy to say, but the hardest to do,
Totally.
right? So that is the biggest part, the difference between multifamily and a stock option, the human side of things, right? I think that's you have more control, and then I think the learning curve is a lot easier because it's more like residential level, not like multifamily. You need to know the right people, have the right people on your team, and then your all your due diligence, like days have to be down to, and all the clause has to be right. Like it's just less variable. Now, the overall return, I would say real estate and stock option, it's not really comparing apple to apple
Hmm.
because no matter it's residential or commercial, most likely your real estate is leverage three
Yeah.
to five times, right? So when people say, "Oh, I make a lot more money in real estate," now if you divide by the amount that he's leveraging, that's what people call cash on cash return,
Hmm.
then stock option will beat it. If will beat it, but with the leverage side of things, it's hard to compare that, right? Then technically people think with the leverage there's more risk, right? Is that true or not? That's up to for yourself or your audience to decide. But when you're trying to throw those different parts out, right? It's and then another part is because real estate, at least in Ontario, not in Alberta, but in
Yeah.
Ontario, has been going up really for the past 20, 30 years. It just looks like a hockey stick. So anyone thinks this money is so easy, right? And stock market really, and the US stock market, same thing. So if you just throw out a good company, let's say not stock advisor, just say Royal Bank, you just throw in there, wait for 10 years, it'll probably go up, right? And you know, money just seems like so easy to be made in real estate, right? Or stock market if you know what you're doing. But in the short term, all those small, almost small zigzag up and down, that's what really get people, right?
Absolutely. I mean, you're right. Um, I mean, first of all, yeah, commercial real estate and multifamily, uh, it's illiquid, and so you generally don't see the same property trade. I mean, if it traded once every couple of years, that would be a lot, right? And so it's more difficult, I think, for someone that's new into the world of real estate to really get
Mm-hmm.
a feel for, in commercial, anyways, right? Like you can see the general trend line, and you're right. In the GTA in Vancouver, I mean, all you had to do was be in the market, and you were making money. You didn't have to be,
Yes.
you know, a genius per se. In
Mm-hmm.
Alberta, for the past 10 years, it's been a flat or declining market. I think it's kind of coming out of that right now. But
Mm-hmm.
back to what you had said earlier, and all of this is going to be founded in your belief system. And if you don't believe in the market that you're trading or the company that you're buying the stocks in or options, then you'll never pull the trigger. And I think that confidence comes from the skill set that you develop, the the real
Education. Yeah.
firm understanding, the education, the people that you have around you.
Mm-hmm.
And you're right, there are more, I would say there's more variables. What I like
Mm-hmm.
about, and this isn't, like, because you obviously do both. What I like about the commercial real estate is that I have a lot more control.
Yes.
And by that I mean, because I know the game, I can influence the outcome, right? If a tenant
Yes.
leaves, I know how to fill it. I know how to market
Mm-hmm.
and approach, and because
Mm-hmm.
I've got the ecosystem kind of figured out. But if you're new, then all those, if you're trying to do it on your own, then that could be problematic for sure, right? Because
Yes.
you're going to learn some expensive mistakes.
Yes.
Um,
Yeah. Just to add on that
yeah,
point,
yeah.
sorry to cut in. So I will say residential and stock option are the same difficulty level.
Hmm.
I will say commercial real estate, it's at a higher level. And we kind of know why that is. It just, a lot of people thought, hey, I can't qualify for residential, so I'm going to go for commercial. Well, I think that's a myth, because
Yeah.
that shouldn't be the reason. It's because you have the skill set for residential and you're successful in residential. Then you go to commercial. Then you have a bigger stomach
Yeah.
and more experience on project managing, contractors, lawyers, dealing with seller, buyer,
Yeah.
tenants. Then you go to commercial. I think that's a big myth. But the good part about stock options, I think, is the residential level difficulty.
Now tell me this. Would you say that what you're doing is fairly active in nature? Like you're kind of in the market on a daily basis, and you're tracking, and um, you're you're kind of trading time for money, but it's leveraged and it's on your terms. Is that a fair statement, or is it
Mm,
I'm misunderstanding that?
yes, yes. Just a couple points I got to point out is I don't leverage. I don't leverage in my stock option. Yes, real estate is inherently leverage, but Charlie Munger say this in stock market. There's only three ways for smart people to go broke. One is alcohol. Second is ladies. Some ladies out there. The same thing, guys. Third thing is leverage, and that's how you see a lot of hedge fund or even a lot of developer. They go bankrupt or they just cannot fulfill their mortgage is because of over leverage. So in stock market, the margin call is quick. In
Yeah.
real estate, sometimes they don't really margin call you. In commercial, they might. Residential, never margin call you. But in stock option, it's really quick. They might just margin call you in a second. There might be AI doing that in the background if you over leverage and you don't have money to fulfill,
So
right?
just
So
let's talk about that. I have an idea of what it is that, but just in case someone that's listening isn't familiar with getting margin called, what would
mhm,
that, how maybe give an example,
yeah,
like say of $100,000, and then someone leverages up another whatever hundred or something.
yes. Let's put it this way. So first, residential. Let's say if you have a $500,000 property and you get appraised by the bank right? Let's say you bought it this year for 500,000. Next year, you drop down to 400K. The bank will not come back and say, hey, you need to put down more down payment.
Yeah.
Correct, Shane? But in stock market, for example, you have a $500 shares of a stock, right? But you only have $100, right? But you leverage to buy that $500 shares. Now you're 1 to 5 leverage. Next year, if it dropped to 400, that means, you know, 20% of that is gone. But
Mhm.
that loss of $100 is equal to the real money you have.
Yeah.
And that's when the brokers will come in and say, hey, if it dropped one more dollar, we're done because you only have $100. Because you leveraged 5 times, it
Yeah.
dropped by 100. That's all your money. We're gonna take that off the table. We're not in the business to lose money, so we're just gonna clean up your position, right? That's a
Interesting.
major difference between stocks, option, and real estate.
Hmm. So what, at a high level, how do you think about investing in options and stock? Like, what's your philosophy behind it? Just so that I think people can get a sense of, so this is how Cody thinks about risk, reward, investing. Because that's important to me. Like, I'm thinking about it from my own
Yes.
perspective. Like, how do you, because even how you're buying your new Porsche right now, I can see that you're very thoughtful individual that goes through like a very systematic way of saying, okay, if I do X, then this and this and this, and how do I mitigate risk? So, but
Yes.
people
Yeah.
don't have the privy of listening to our conversations offline. So,
Yeah. So put the Porsche aside first. Coming back to the stock option is um like the way I look at it is for people like your audience, most of them invest in residential side. So with the bidding wars, with the sellers market has been consistently going on in Ontario or Vancouver, it's that we want to buy off-market deals. That's why a lot of wholesalers are being, everyone's a wholesaler now
mhm,
because everyone wants to get an off-market deal. At the
yeah,
end of the day, people want to get below market value
yeah,
and not going through the bidding war. And this same thing of an off-market deal, you do all your homework on the fundamental side. You already know this is a property I can buy. I can do something to it, whether that's a burr, whether that's a flip, whether it's just a buy and hold. You know you want to hold on to this for long term, and you know what's your worst case. So if you can buy it even cheaper than market value, you're even happier.
yes,
So that same philosophy we're using in the stock option. And that philosophy, instead of property you agree to buy, now it could be a company,
right,
could be, Royal Bank, TD, or whatever, not stock advice, anything. I'm just throwing out some big names,
yeah,
right? That's the Royal Bank's at $100. And you're happy to buy Royal Bank at $100 and leave it for 10 years. But now you can actually become an insurance company where you sell an insurance for someone on the other side that fray RBC might go below $90.
right,
But for that insurance, they pay you a premium of, let's say, 100, $200, right? So for you, the biggest risk is RBC could go to zero,
hmm,
right? But more reality, that risk is a lot lower, right? And there's always risk in investing. They can say
yeah,
commercial go to zero, residential go to zero, but we all know, the risk is a lot lower.
yeah,
And now that with your vetting of your fundamental, now you can actually buy a company you want at, let's say, 10% off, right? $100 to $90, 10% off, and you get paid some premium like an insurance company, and that further reduce your cost of ownership. And the worst case, even if it goes to $80, you have to buy at $90, which is what you agreed to, just like an insurance company. But your cost of average might be, $88, $87. So imagine people bought it at 100. Now, if the stock never go down to that worst case, just stay the same, keep going up, you keep all those premiums, just like an insurance company. Keep all your auto premium, right?
premiums,
Auto
right.
insurance until you make a claim. They never give it back your premium, right?
So that, see, I really, I like that explanation because I think that just really lays it out, right? And so, because there's always going to be two people on either side of the bet, right? Uh,
Yes.
because otherwise, why would someone buy insurance?
Yes.
They're buying insurance because they are either hedging or they're worried, I
Yes.
guess, that it
Right
could go
on.
down.
Yes.
And you on the other side are looking at it saying, I'm okay with that risk because I've assessed the company and based on my understanding of, we'll just use RBC for example, because
Yeah.
here in Canada, even in the US, you would know what that is,
Yeah.
Royal Bank. You're saying, yeah, I'm comfortable owning this. it would be similar if you were buying real estate. And I'm just trying to think of an analogy that would be realistic, but people go out and buy options on properties, right? It's almost like, let's say you're going to put a non-refundable deposit on a property that you
Mm-hmm.
intend to purchase, right?
Mm-hmm.
And so
Yes.
your risk is that options money, right? I guess the
Mm-hmm.
difference in stock is that if it drops below, you actually have to close on it. Is that correct?
Yes. And to add on that,
Yeah.
I think this might help your listener a little bit.
Sure.
I use this analogy in my free webinar is
Yeah.
your neighbor John, let's say it's, a grandpa. Grandpa's like, I don't want to lose my nest egg. I think the market will tank just at what CMHC said, 20%. So I want to hedge the 10%. So
Yeah.
if he has a property of 500,000 and you go up to him and say, hey, Papa John, I know you're afraid that property might go down by 10% to 450 or, give or take. I will buy your property. We sign a contract. Next year, there's 3 appraiser come in. If it's lower than 450, I will buy at 450. So we hedge that 50K
Hmm.
instead of losing
Okay.
that 20% all the way from 500 to 400.
Yeah. Yeah.
Are
Yeah.
you okay with it? Papa John's like, sure. But what's the catch, right? You're like, okay, you got to pay me 10 grand for that. And Papa John thinks that, you know what, hedging 50K and I only pay 10 grand, it's okay. At least I can keep that 40K. So that was the thinking for it. So if the property price is above 450,
Yeah.
460, 500, 550, whatever, you keep all the 10,000. But it's below 450, you have to be ready to buy because that's
Yeah.
on the contract.
Yeah.
And you already know what to do because that's your neighbor's house. You
Right.
already did the same with this house. So you're happy with buying a 500,000. Now it's 450. That's the idea for it, right? That's the risk, I would say, and the reward for it.
Perfect. I like, yeah, your metaphor was way better than the half-ass one that I tried to, stitch together on the fly. But that's because I don't, I'm just
No,
exploring this. So it's
you
good.
did a really good job. It took me a while to try to figure out a bridge for a
Yeah.
real estate investor.
Yeah. No, I think that's incredible. So how do you typically how does someone that's never done like I've bought stocks, but I don't think I've ever bought options. And I mean, I've been on your website and I was just kind of looking at all the different lingo and puts and calls and options
Yes.
and I mean, I have like a vague idea just because I've been in
Hmm.
this business, but I mean, what's the timeline for someone to be able to go from having never put a trade on to
Hmm.
feeling like, you know what, I'm gonna do this. I'm gonna
Yes.
make my first trade.
So I actually asked that question in my alumni group because I want to know, right? I just asked a question, how long did it take you guys to make the money back? But we all know that the account size matter and belief system matter too.
Yeah.
And the
Yeah.
risk and reward appetite is different for everyone. Now, take an example. I have a couple physician, like doctors in my group. I have a couple musician as in good at music. So they're saying, Cody, like for them, they say took us 1.5 month in paper trading, as in we open up a fake account. Everything is real except for the money is fake.
Mhm.
They went through the course and then they start playing a paper trading account and review the material. It took them 1.5 months to put in the real money. That's probably the longest I have heard, right? But again, this is not a race against anyone. It's really a competition against yourself. You're better than yesterday, right? But on the other side, I have some student. Now that I've done my course 4 or 5 times, there's all the recording, all the future recording will be available to my students as well, and all the webinars. So for them is they sign up and they go review all the recordings, one of them, one out of the 4 or 5, some webinars, and they start making trading already. And they say, Cody, I make the money back even before attending a life course. So everyone's so different. And
Yeah.
that come back to your risk and reward appetite, depending on your belief system and your experience just with money and the comfortability really with a coach like myself, right? It's like, is Cody real? Is Cody not, right? And that all plays a big part of it. And just give, someone as they start making trades, real money before the course, some people is like, took them 1.5 months, right? Or maybe some of them never took action because they have too many things going on and they don't have a strong belief system that this could replace their full-time job and their second side hustle. I was having a conversation with someone. He's like, please kick my butt in this conversation. I spent that 1 hour trying to kick his butt because he had 3 jobs, full-time job as an engineer, mortgage specialist, and now he's trying to do flipping. So I say, what if this strategy, I know you have a couple 100,000. What if this strategy replace your full-time job?
Yeah.
Because I was an engineer, I know how much you get paid, and can replace your real estate broker job, 6 figure. What if this amount of money you put in can replace it? That will give you 10 hours more time per day. What will you do with that time? And he was shocked, right? So that was like the perspective change, right? He was like, no, sign me up in September. I'm like, what about this 4 months? You're
Yeah.
trying to hustle the same thing, hoping with different results, right? But you're not. You're not. This is all opportunity cost, right? So it's only because he asked for it. So I kind of pushed a bit harder. Usually I don't. Usually I'm like, cool, no, no worries, right? But he
Yeah.
told me in an email, please kick my butt. In the call, I'm like, okay, I will kick your butt.
So you said something, and I like that too, because um, and you said the account size matters as well, right?
Yes.
So what is uh, a, a reasonable amount? Like I tell people if they're coming into commercial real estate, like minimum 100 and probably 250. And obviously the more capital you have, the more options you have, right? Because then you
Hmm.
probably need less partners or no partners. But if
Yes.
you're coming in with 100, you're going to need partners, and then you're going to have to understand how to raise capital, which
Yes.
is not insurmountable. It's just you just have to be aware of where you're at, right?
Yes.
And so in your experience,
Hmm.
what is it that most people start with, and what is a reasonable amount, so that if you did want to replace 6 figures,
Hmm.
what kind of an account size is someone starting with, I guess?
Hmm. Yeah, great question. And even in a webinar, free webinar I share, people ask that, so what's a realistic return, right? And from what I see from all the alumni, right, and myself over the years, is a 2 to 4% is a good range to aim for. Now, if we reverse engineer that, say, let's say 2%, okay, just say 2%,
Two
you know,
percent
we
in what time
a
period?
month, a month,
A month.
a
Okay.
month. So that's 24% per year.
Yeah.
Now, if we have a 100K account, 24% is $24,000. So probably not enough to replace your income on the conservative side.
Yeah.
Now, you might need, let's say 300K of 24% on the very conservative side. Now, let's just say you just sell options on RBC and you're far away, like $90 compared to $100. That's probably what you would get, right? And if you're on the conservative side, 100K give you 24K. Now, if your job is like 3 times of that, which is 72,000, then maybe you need a 300K to be more comfortable. You can close your eyes and do this all day. Don't have to watch the market even. Just keep doing it. And then I would say 300K of a 24% return will be more realistic. Again, market change up and down. As a matter of fact, during COVID, and my group make a lot more money during COVID just because as an
More vol.
insurance company, when the uncertainty is high, volatility is high, and
Yeah.
you get paid way more as an insurance company. Right? It's
Sure.
like there's a tornado outside, and you try to insurance company call you and say, "Do you want a tornado insurance?" Of course, you're going to pay a lot for
Yeah.
it.
That's like I can I don't want to put words in your mouth, but you've mentioned Charlie Munger, and you just got really solid metaphors that whenever I read Warren Buffett or Charlie Munger or Howard Marks or any of these kind of seasoned real estate investors, they're able to kind of take the complex and take it down to a very simple way of explaining it. And I like that analogy of the tornado and buying insurance, because you're absolutely right. I mean, that's kind of the situation I think some people feel like we're in right now.
Yeah. And to add on to that,
Yeah.
what we're trying to do all day is when the tornado is outside, we know it's a once in a 10-year thing, just like COVID, once in a 10-year thing. We know it's going to pass. Whether there's going to be damage, yes, unfortunate, but we're going to go get over it, recover from it, and we're going to be stronger. So why not take that chance as an insurance company and go out try to sell as many tornado insurance company as you can? Of course, you got to know your back end. You actually got to make sure that you can make that. If someone make the claim, you can pay out, and you have your buffer. But after that, that's when most most money are make, because that's when you're greedy, when others are fearful. and you're kind of going counterintuitive, but that's where the risk is technically the same as once in a 10 year, but it's because the fear of the human, they'll pay a lot more for it. And you're getting that premium, extra premium for really the same risk, right? And then the next day, if the tornado goes away, sunshine and rainbow, we can go out and call our customer and say, hey, now that we know the tornado's gone, it's usually only 1 to 10 years. I know you pay $1,000. Why not we just scrap this? I'll pay you back $100. And you'll be like, oh yeah, at least I can get $100 back. But it was only been 1 year, 1 day. We took that $900 just because of that fear. So this is what we do all day,
Oh,
right?
interesting. So you can close out positions earlier.
Yes, yes. In
See,
the
this is,
America, yeah, in
I was,
US you can. In
yeah,
Europe, if it's a Europe option, you cannot. You have to wait until expiration date.
okay.
But in US, that's the interesting thing. There's hundreds, like for a big stock like Apple or Royal Bank, there's always hundreds of contracts transacting every second. So we
Wow.
can actually close our insurance contract anytime at the market price.
Hmm. See,
So
this to me is just um, like, I'm trying to think of the best way to put it. I don't know what I don't know. And so I
yeah,
don't even know the types of questions to be asking. And that's why it's good just to have this conversation because then things come out. But
yes,
it's one of the firm reasons that I mean, I think we talked about it. My parents lost a bunch of money investing in the wrong
yes. Same,
investment
same on my
when
side.
I was, oh, there you go, right? At a very
A
young
lot, a
age.
lot. I mean, a lot, like millions. So
Yeah.
they're happy to see me step up where they dropped the ball. So let's just put it there. I don't want to say more because
Yeah.
my dad might listen to this.
Yeah. Well, I know it's always like it's painful, right? To
Hmm.
lose that kind of money because I always look at it and say, because my parents refinanced their house and I know it took them 10 years to pay that off, right? And so
Yeah.
they made a decision in a couple of hours, yeah, at the most, right? And that's
Yes.
how most people do, right? Because to your point, it's either fear and greed, fear of missing
Yes.
out and greed that, they don't, they want, they're envisioning what the future could look like, right?
Yes.
And
Yeah.
people that, I mean, some people don't do it intentionally, but the best salespeople out there know how to press those hot buttons, right?
Yes. Yes.
And
They know it well. And then
yeah,
now that I'm, I do have a course and all that, and then I try to hold that integrity really high. Just I I don't want to, you know, there's a lot of money to be make. You probably see a lot of documents us on a payday loan, whatever, but I try to stay away from it. That's why my course is not cheap. And that's why I vet all my people because I don't want vulnerable people to come in and say, you only have a couple $100,000. I will say, I promise you the moon. No, I want you to have more money, like a lot of your audience, and the risk better, and what you're actually going to get.
yeah,
And then you have it's just better understanding. I don't want to prey on vulnerable people. I want people to actually ask me a lot of tough questions. And then I keep my reputation. I'm in for the long term, right? Just like you. We're not in to get a quick one and run, right? We're in for the long term. So this is something my kids or grandkids will see one day say, this Say Yeah option course 50 years ago. It still work.
yeah,
I'm proud of my grandpa. I don't want to be like, my grandpa's, you know, I think we're on the same page for that. It's a generational wealth and accumulation thing,
absolutely,
right?
absolutely. Yeah. You said something that I was going to touch on it, but
Came out the other side. Sorry,
no,
I
no,
got too excited.
no, that's okay. Um, uh, anyways, so I want to be respectful of your time, and I guess if someone like you've mentioned the webinar, obviously we'll have links to your website, but just for people like right now that are listening, because I know you can put all the links in a podcast, but the truth is, I know if you're like me, you're out for a run or a walk or driving,
Yes,
you may not, you might finish listening to this and then go right to the next podcast. So,
correct.
what is the best place? Is it Cody Yeh, and that's
Yeah.
YEH.com?
So
Yeah.
CODYYEH.com. That's where you can find all my other interviews. They're all free to listen to. A lot of hosts ask me really tough questions, a lot tougher than yours. So you're very generous. And those are all free resources. I have a YouTube channel as well. Again, Cody Yeh Investing. Or follow me on Instagram. There will be some fun stuff, like you said about Porsche. So probably I'll capitalize on that and put on some marketing on that, right? And yeah, those are the best places. Uh,
Okay, I know what I want to ask you, and this is just totally selfish for me. So if people want to tune out now, they can. But I think if you're in the business of real estate, or I mean, the truth is like, you know, the more people that know you, the more people that can send you opportunities. And
correct.
so what I was uh, so impressed with was your YouTube audience. And
Mhm.
so we don't have to go into like the deep dive here, but how did you grow and scale your YouTube? Because how many videos do you have on it, and how many
I have
subscribers?
around like 17. Two of them are in Mandarin, so I hide them because I found from the back end most of my listeners are in North America and they're English speaker.
Okay.
So yeah, Google owns YouTube. So most powerful search engine and the data analysis, it's provided to YouTubers. A
Yes.
lot of people don't know how to use that, but YouTube, it's just like anything else. The more you get educated, just like a multifamily, I would say YouTube probably same level as multifamily in terms of all the small things. You got to make sure the ducks are lined up in the row. Like for example, for any of my YouTube video, when stopped making it 8 months ago, all my YouTube video, all the way from what am I going to talk about, what is my title, what is my thumbnail of that picture, whether people want to click in it or not. I'll ask a couple of friends and said, "Do you want to click this or that?" And I have to make sure all those are lined up in a row, and I have to make sure the flow is right. I have to make sure I don't confuse people because now there's so many video beside it competing with my video. The
Yes.
moment they're confused or find that Cody's boring, they're gonna click out. So all those factors have to come in, and I'm fighting with more YouTubers now, right? So first is you got to create value, whether that's entertaining or whether it's educational. If it's both, you're golden,
Yeah.
right? Then that's where, at the end of the day is YouTube is just like Google. They know who your audience is and they know what is their purchasing power.
Yes.
And Google and YouTube is basically getting paid by advertiser come into their platform and place advertisement. So the more purchasing power from your audience, that means there's more opportunity of conversion.
Yes.
Then you will get paid more, at least from the AdSense standpoint, right? The YouTube ads standpoint.
Yeah.
But for you is, what type of audience do you want to attract, right? If it's going to be pure entertainment and pranking, I know what type I'm going to attract. If I just pure gaming, like live gaming on whatever, then probably going to be a certain type. But it's about real estate, about that, and how do I keep more audience?
Mhm.
And then at least you're entertained, so it's not so hard to watch it. I'm like, we're going through the spreadsheet of 100 items. No, we're gonna do it step by step. People are gonna tune out, right?
Yeah.
It's like too much, right?
Yeah.
So
Well, we'll have to talk about that in the future, but I think that it's just you can just see how intentional you are on how you think about things, and I think that if someone is really considering trading options, uh, then go check out your webinar, right? Go
yeah,
listen to it and see if it's for you, because it's not. I never. I think one of the things that has always kind of turned me off from some of the marketers out there, where they make it like everybody can do this. And I don't actually believe that everybody should or could do certain things. I think it's,
mhm,
you have to ask yourself, is this something that resonates with you? Do you believe in it? Are you going to commit the time and energy and resources to really master it? And if it
mhm,
is, then certainly put in the investment, right? The commitment to do.
yes,
But if it's not, then hey, at least you've only spent an hour, however long your webinar is, to really kind of see whether or not the
yeah. There's a lot of golden nuggets in there. People can really start on their own with the webinar. And here's my take on it. When I used to attend a lot of real estate seminars and all that, and I know get to a certain point for multifamily, I need to pay because there's first too much information. Second, it's just a lot more valuable just in networking, a lot of small things that you really have to be surrounded by the right people, not just people who talk about it so they seem smart, but people actually doing it. A lot of people who fail are even more valuable. So we can learn from them. So we don't do the same thing.
yeah.
Right. So same with stock options. I I took many courses over the years, day trading course, all different stocks course, option course, and I came up with my own because that's how I know what works, what doesn't, and how as an audience are taking this. I know all the belief system, and I don't try to sell people to the moon. I under promise but over deliver. Then I turn away a lot of students too if they come in and say, Cody, I want to make 200% in 1 year. I say, hey, this course is not for you. Day trading, maybe you can consider some other competitor.
Yeah, yeah,
And if it's right, people say, hey, Cody, I just want to spend 30 minutes per day on my phone. Some days I don't even have time. I'm meeting all day. Okay, this strategy for you. You have a big account. Okay. Yeah. You have real estate. Most people have money in real estate, bigger account, right? So those are the easiest people and the right people with the right mindset because they know the long-term game, right? And that's why a lot of people lose money or call stock as a gambling because people just trying to buy a lottery ticket.
yeah,
And we all know you don't put all your money in lottery ticket, but some people do just some
yeah,
of the speculative stocks, right?
yeah. Well, Cody, I appreciate your time. We'll have to stay connected. I know that we're talking about some other things offline, and I'm looking forward to it. So appreciate you coming on. And if you are interested, go check out Cody's website, his webinar, his YouTube. He's got a ton of great information out. And thanks again for coming on.
Yeah. Thanks for having me on, Shane. It's such a pleasure. Always a pleasure.
Bye for now.